Hey guys, welcome to Forex Thursdays chapter 5. So this is the first one of 2020 and I did not do one basically when the last one was due to some things that were going on, and I'm basically kind of like rebooting the website a bit on the member section. So just kind of focusing on that side before I kind of build up and start kind of exploding everything again, right? So welcome back. Happy New Year to those that haven't seen me say in a video Happy New Year or haven't seen me say Happy New Year. Hopefully 2020 is going well for all of you, despite all the conflict and stuff that's going around with America, Iran, Australia, all that stuff. Hopefully it all kind of settles and everything kind of goes down to peace and stuff. But other than that, hope everyone is good. Hope everyone's had a good year trading. I have all my trades so far. I've done very well this year, and I'm just sticking to my goals, sticking to my rules. Just really pushing to reach them. Just staying motivated, staying on top of the game. Right, very very important. So, few pairs today I'm going to be going through. So let's get started straight away. Obviously, Forex Thursdays. If you haven't seen the other ones, go check them out. I just go through some currency pairs and maybe an index or so, just kind of give you guys a forecast of where I think certain things are headed, and that's pretty much it. And you can obviously intertwine that with your own analysis as well. Don't purely rely on this. It's just kind of like a benchmark, and you can kind of hopefully try to learn from this. That's obviously the goal, but and other things as well. Okay, so let's cool. Let's start off with AUD/USD. So what I've got here, so I'm currently on the monthly chart. Got these candles over here, of course. Now the first point I wanted to point out was this monthly sponsored candle here. This black candle was satisfied. 50% of that was satisfied, as you can see alongside that crosshair. And I'll just extend out a line here. You can see that was satisfied. Now what, because this has been satisfied obviously on the highest time frame, not the highest time frame. I know you can get like your 3 months in a year and stuff, but the highest time frame for me, in my opinion, that's been hit. And now what I'll be waiting for is longs all the way up until these highs here. Okay, unless this breaks and we continue falling lower and end up breaking these lows, or these lows, then obviously I'll be looking for short, right? But because we've hit that reference point on the higher time frame, I will now literally throughout this whole period, unless obviously something changes and we end up going violently bearish, to the downside, maybe targeting even those lows over there, because we've hit this point, this whole section, I'm just going to be looking for buyers, right? I'm not going to be looking for any types of sells unless I'm going for like a scalp, a scalp setup that kind of looks appealing to me. Then that's the only time I'll go for a short in this section, okay? Until we breach those highs, all right? Once obviously we breach that, then we can kind of maybe shift our bias a little bit and see, okay, where we're going. Okay, but again, like I said, if this does obviously shift, then we know what to do. Cool. So going back to what I was saying, monthly sponsor candle satisfied. Now I'm going to go to the weekly, and what I just want to demonstrate here is Fibonacci use. Now I want to go from the very bottom of this leg to the very top of this current leg. Now for the members, I explained why we got this violent move from this 50% level, and I broke it down to the very core detail, 15, like literally from the weekly down to the 15, why exactly we moved in, how exactly you could have caught it to the very T. Members got that proper constructive video there, which is quite good. However, that's not the kind of thing I wanted to show you here. What I wanted to show you was this. All right, this is our optimum trade entry, or our 705. It's basically in between the 6.2 and the 7.9, which are the Fibonacci levels I like to use. Now, as you can see, we've got this sponsor candle here, right? This reference point on the weekly time frame, which we know are very important to us. Now, this 705 is technically 50% of that reference point. If I just draw out that fib, see where 50% lies. 50% just a bit below it, which is absolutely fine. But they kind of line up. So what I'd want price to do once it reaches this line here, I'll be kind of looking to see, okay, maybe I can scale in for a buy, and hopefully ride this longer, ride this up higher. Okay, that's obviously one level. Now, okay, yeah, you could wait X amount of days or weeks or whatever to hit this line. But you maybe want to do something before that. So what do? Again, we go to the daily and see, okay, how could I take this trade down maybe to here, which is also a daily sponsored candle, as you can see there, where we're on that candle. And how can I write that down? Now, most retail perspective traders would have maybe taken the trade within this quote unquote left shoulder, right? On the left shoulder, head, right shoulder is what most people would have seen, right? In retail terms. However, I feel, based on my rules and what I teach and what has worked, is that price will ultimately jump. Maybe it might come down to this level, or it might even come down to the quote unquote neckline, spike it, hit this candle down here, there where I'm circling with my mouse, that candle right there, and then ultimately go up to this kind of reference point over here, right? That the bottom of that candle, even 50% of that candle. Now, what's interesting about this is, if I just keep that line there, I'm going to show you something pretty cool. Is when these reference points line up with our Fibonacci levels, okay? I'm going from that high down to that low. Okay, yeah, they don't line up with those ones. Obviously, it's not going to line up with 6.2 because that would be like here somewhere. However, it lines up very, very nicely with the 7.9 level. Okay, even better. Look, I'm not even at the bottom of those wicks. Let me just draw that down a little bit. There we go, on the dot, literally. There we go. Literally on the dot there with that fib. So what we could expect is either just a move up to there before falling, or we could see a hit of this region before getting that move up. Or ultimately what we might have is price may just continuously just fall, hit that, and we get our move to the upside, okay, and possibly even completely disband this level here. But however, I don't feel that this line here, which is that weekly sponsored candle, 50% sponsored candle, and this daily normal sponsored candle, I don't feel that'll be hit yet without hitting this point here. However, it's completely possible, and I'm not saying it's not, but following my rules and what I teach and stuff, that's what I'd be looking for, right? So AUDUSD, one that I just kind of wanted to share with you. I've shared with the members already, and they have seen and maybe got a bit of a deeper breakdown, but that is ultimately what I'm waiting for, okay? So I'll be looking for sales around this region here, potentially, and then obviously once price comes back down into this kind of region, then I'll be looking for long trades or long opportunities, okay? So keep that one in mind. Cool. Next, what we have next is Euro GBP. And I do really like this setup. Now I want to just point out quickly on the weekly, I'm sure you have seen the demise of Euro GBP and obviously the uprising of GBP in general recently. But as you can see here, we had not only these lows, but we also had these lows that were efficiently taken out. I'd like to say they were stabbed very nicely by this move to the downside here. As you can see, if I line up my crosshair, there we got that nice stop run, or as I like to call it, TST over here. Now price has obviously started to move back up, okay? So what can we see there? Okay, yeah, stops have been ran, and we could potentially see some sort of reversal, right? That's what I'd like to see. Where could we reverse to maybe? Well, we could either reverse to here, or we could reverse to here. And again, I'm not going to delve too deep why we could reverse into those levels. Some of you may know, some of you may not, which is fine. I'd like those levels to be hit if we did work. If we are going to reverse, this is like more long-term stuff. We'd be looking at these areas by the end of the year. But again, it depends on what happens with Brexit at the end of the month. Okay, may be some some surrounding factors of that. So yeah, if I go onto the weekly again, sorry, I just forgot to point this one out. I can see that we have this candle here again. I'm just going to mark out 50% of that, I'm just gonna get rid of these extra levels so you can see the 50%. 50% of this candle, this reference point. God, let me get that online. There we go. We've got 50% of this. I'm just going to delineate this with a trend line or a line. And what's pretty nice about this as well is that on the daily, kind of lines up with 50% of this one as well, just off a bit slightly. Okay. Which is fine. Now, see, that's kind of one hinging factor. So if I draw that out again, where we get 50% of this candle, like right on the 50%. Something else that's pretty interesting as well is if I go to the 4 hour, what we've got here is something I like to call an alleviation candle, and it's this candle right here. It's that candle right there. Okay, again, I'm not going to delve into too deep why that is, blah, blah, blah. But that 50% daily basically lines up with this, right? And once price comes into this candle, we could ultimately be seeing some potential momentum to the upside. Now, another reason why I think price will definitely come down and essentially hit this level is, one, what do we have here? Our equal lows. So that means potential buying spiking, or TST is potentially going to occur. Okay, so we're waiting for these to be hit. Second of all, now this isn't something too important, but as you can see, 50% of this candle has not been fulfilled. So I'm just going to mark this out. It almost was, but it hasn't been. As you can see there, we still got that small gap. We've still got that small gap still unfulfilled, right? So price could come up ultimately into this kind of region here. If not, price will come into this region here, as this hasn't been fulfilled. Or it could even go a bit higher, maybe not. We'll see what happens. And price could again have that melt and spike those lows there. All right. So it's just something to be aware of. You know, kind of seeing maybe that short term. Okay, where can I take this? And obviously, once it hits here, you can see. All right, yeah, I'll take this or I won't take this, etc. Right. Once price obviously comes into your reference point, that's where you go to the lower time frames and you see. Okay, yeah, how would I enter this? All right, I would never enter a trade on anything over 30-minute ever. And my students know that very well, and most of them that have done the second lesson will know why I do that, and how it helps. And that's how I can pull off my 4 pip stop loss for like these 200 TPs, right? It's also time frame selection. Cool. So that's what I'll be waiting for Euro GBP. It's quite an interesting pair, in my opinion, and this is where I'll be looking for that kind of long momentum to start kicking in over here, right? Okay, so just kind of take note of that. Hopefully that kind of lines up with your analysis. Cool. Now, I just want to talk you through UJ and why I took it and etc. Now, I started off seeing this. This one's candle here. Hadn't been fulfilled. We tried to there, we tried to there, we tried to here, we tried to here. Formed some equal highs there. I was like, you know what? Price is going to push over these and it's going to hit this sponsored candle and price will decline. Alright? And we did. We did at first. Let me talk you through it. So price. Now, I warned people to not take the trade once price hit that green candle. Okay, because these highs are more important than this candle. So they're more likely to get hit instead of that candle there. Instead of this level there, right? So what price did? Yep, okay, we saw some rejection here. And, there's a few people saying, okay, yeah, price is not going to hit this, price is not going to hit that. Yeah, right, be careful, so on, so on. But I was like, just be patient, wait. Price came and hit that, which was nice. And we went to these lower time frames. Once price hit that, even lower, went to 15. And I took my trade based off a 15-minute rule. that I have. Again, I'm not going to give it out, blah, blah, etc. And so I took the trade on 50% of that. Okay, so I took it there. I literally, it was when price came up and wicked there. All right, took the trade, had my take profit. I think it was at these lows, just there, and my stop loss was easy 6 or 7 pips, and about 6 pips. It was just above that candle there, and price did ride down, and I got into about how much percent? So 5, so that's basically 6, and then they're about 5%, right? And I took it was around here when price had these 2 wicks. When price had these 2 wicks here, is where I took off 70% of my trade, right? And I placed my stop at break even. So I was like, okay, you know, if price comes back up, I'm not fast. I'm happy. I'm just gonna let the trade ride out and see what happens. Follow my rules. I've done everything I need to do within this trade. I'm just gonna let the computer do what it has to do, right? Either hit break even or hit my take profit. And then it hit obviously my break even, which is fine. I had these 2 big spikes here. Okay, that's also exactly why I took the trade. Now, the reason why this may be pushing higher is that this is the important thing now that I want you to take note of, right? Is learning from why it actually happened. Yeah, okay, break even isn't bad because it's better than a loss, but you also want to know why it didn't hit your take profit. If it didn't hit your take profit, ultimately you want to learn why it didn't hit your take profit. Okay. Even why it hits your take profit, you do want to learn why, because if it hit based on luck, you're like, oh yeah, I got lucky. It's not good. Yeah, it may be good that you won some money, and yeah, you know, you can have X weekend now, or whatever the hell you want to do with your money, right, or invest it. Yeah, that's good. But what's more important is learning how you did that and being able to do that more with knowledge, right? Okay. And so the reason I think price is still pushing up is to fill this gap here. Before potentially getting another decline, right? And me, ultimately, I'm not too bearish on the dollar yet. I'm still waiting for that level of 98 point, whatever the hell it was, 50% of the weekly. So here, that's the level, 98.85 or 83, 98.83. That's the one. And that's still what I'm waiting for. Okay, so price came into my spiked region there as well. I just marked that out. So what I'll probably be waiting for DXY now, potentially some move down, get into our fib levels that I had marked, and kind of get some push up into that. Just taking out these highs here, because what we have here, equal highs. All right, price coming up higher into this region before getting that rollover to the downside for that 2020 decline. Now we probably will, if we do move up into here, probably be around March time, February, March time. If it is there by March, I'll be extremely happy. Like on March, I'll be very, very happy for reasons I won't disclose again too long. So that is another reason why I think UJ will potentially still push up into that. Okay. Last of all, oil. I just want to talk about. I think it can push up and kind of have this kind of roll effect motion to the upside into this sell zone before getting that decline to the downside. If not, if we don't push up to there, we'll take out all these lows, all of them. These equal lows here, bang, they need to be taken out. Imagine the liquidity swimming, just lingering below there. All right, absolutely fuck tons. So, you know, that low, this low, that low, all these lows here. Okay, but first I would like price to come up into that. Let's see if this is any Fibonacci levels. So 62 and 705, 79. Kind of. It's like in the middle between, 705 and 79, which is fine. 705 is optimum trade entry. That's kind of where it's resting. So we could potentially maybe take shorts around that. This where I'm moving my mouse in between those two lines here. Okay. Cool. Other than that, hopefully this is of some sort of use to you. Hopefully, these moves do pan out and you understand why they pan out. Do your own research and stuff like that as well. Please don't purely just rely on this. Yeah, you may see a lot of my trades going to plan, but that's because I know I've learned why they go to that plan. I don't just kind of look at this as a handout, as in free money, or whatever it is, but learn from it, make it into a lesson. And if they lose, don't rely on me to tell you why they lost. If they do, learn from it yourself, because if you learn from it yourself, you then tell yourself subconsciously and consciously, if you do become conscious of it, wow, I've actually taught myself this, right? And that is strongly important, very important. Other than that, guys, thank you very much for tuning in to the 5th chapter of Forex Thursdays. A lot more to come, for the website, there's a lot for the members. If you've stayed tuned to the very end, I'll just talk through what I've kind of added for the members. So first of all, for those that aren't even members yet, you can pay yearly, and you'd have like a 20% off what you'd be paying for the monthly if you sign up yearly. Again, you can cancel after the first year, whatever it is, or whatever you want to do. So that's obviously pricing. Now, second of all, for the members, there's Fundamental Fridays, you'll have your first edition tomorrow. You also have daily motivational videos, which you've had 4 of them so far. You won't have them on weekends, but that's obviously where you have your podcast, and Saturdays kind of like a resting day. And you also have Tuition Tuesday, so you'll be learning something new and valuable every single Tuesday, stuff that won't be publicized. I think that's pretty, and you've obviously got your new group chat now where you guys can talk and stuff and share ideas. So there's a lot for the group chat. There's a lot for the members for only just £25 a month. If you make that back within a single trade, you can find £25 on the floor, right? It's super dirt cheap. Okay. If I didn't put the discount for the yearly payment, it would be £300, but it's now at £239.99. So go look at that, see if it's interesting. I may lower it down even more, just because I purely feel people shouldn't pay as much money for certain things. But then again, hopefully you're all learning something, and that's the goal. All right. And if you don't want to pay that, that's absolutely fine. Maybe let me know why you don't want to pay for the subscription, and maybe I can work on whatever I need to work on for you, to kind of get more of an audience. That'd be great. But other than that, guys, again, thank you very much for watching. Have a great weekend and have a great start to your week, and I'll catch you in the next one. Bye bye.